People don't struggle with trading because they lack intelligence. They struggle because they're human. And markets don't reward human instincts. That alone explains more than most strategies ever will. If trading rewarded intelligence, the smartest people would dominate it. If it rewarded effort, the hardest workers would win. But that's not what happens. Instead, we see capable people burn out, overthink, lose patience, and walk away confused. And at the same time, we see a small group of traders who look almost detached, doing very little, reacting to almost nothing, and quietly pulling money from the market. That contrast isn't luck. It's behavioral. The market doesn't respond to opinions. It doesn't care what feels logical. It doesn't reward effort or intention. It responds to repetition. And repetition is uncomfortable for the human brain. Most traders come into the market trying to figure it out. They treat trading like a puzzle. If they just learn one more concept, add one more indicator, watch one more video, then everything will finally make sense. So they add, they stack, they tweak. Their chart gets louder, their mind gets busier, and their results don't change. The traders who eventually become consistent do something that feels wrong at first. They remove. They remove choices. They remove opinions. They remove flexibility. They narrow everything down until trading becomes repetitive, predictable, and honestly, a little boring. And boredom is not a failure signal. It's a stability signal. Here's something important to understand. If your strategy needs your interpretation in the moment, it's not a strategy. It's a reaction. The market doesn't ask what you think. It only shows you what is. The difference between struggling traders and consistent ones is not prediction. It's response. One group asks, "What do I think will happen?" The other asks, "What do I do if this happens?" That single shift changes everything. This is why demo trading feels easy. There's no pressure, no urgency, no emotional cost. People follow rules effortlessly. Then they go live. Same charts, same strategy, completely different behavior. Suddenly they hesitate. They move stops. They override rules. The market didn't change. Their nervous system did. When money is on the line, the brain treats uncertainty as danger. So it looks for control, for relief, for action. And that's where most mistakes come from. Consistent traders don't eliminate emotion. They design systems that don't require emotional input. They don't rely on discipline alone. They rely on structure. Because discipline gets tired. Structure doesn't. Another uncomfortable truth. Many traders secretly enjoy the struggle, the research, the theories, the feeling of being close. It gives meaning to the effort. But markets don't pay for effort. They pay for execution. And execution is repetitive, unexciting, neutral. This is why very intelligent people often struggle the most. Intelligence adds layers, questions, adjustments. But trading doesn't reward depth of thought. It rewards depth of consistency. Doing a few things correctly, the same way over and over. Most traders don't lose money because their idea is bad. They lose money because they interfere with it. They step in early. They stay too long. They try to fix randomness with action. Consistent traders expect randomness. They build it into the plan. There's a moment almost no one talks about. It's not a breakthrough. It's not a big win. It's the moment trading starts to feel quiet. You trade less. You watch less. You react less. And that silence feels wrong. So people abandon it. But that quiet is often the exact moment. Things are finally working. progress in trading rarely feels good. It feels dull, uneventful, emotionally flat, and that scares people. So they add excitement back in, and with it, they add mistakes. Confidence in trading doesn't come from winning. It comes from knowing exactly what you will do before anything happens. When decisions are made in advance, emotion has nowhere to interfere. Losses stop feeling personal. Wins stop feeling validating. They become data. At some point, traders stop saying, "Trading is impossible," and start saying, "Trading is obvious." Not because it got easier, but because they stopped arguing with it. They stopped trying to outthink the market and started letting rules do the work. They stopped chasing certainty and accepted probability. They stopped needing excitement and embraced repetition. That's when confusion fades. Not overnight, not dramatically, quietly. This is NAM Ghost FX. We don't make the market louder. We make it smaller.